Part B of question 1. Refer to scenarios 1, 2, and 3. Discuss briefly whether the event's transactions will have an impact on gross income for the 2020 year of assessment, 2022 year of assessment. Wow, I keep saying that. You're not required to discuss any other tax implications. Okay, so here's a mark breakdown. Now, they don't always give it to you like this. Basically, the general marks are for some general comments, not specific to the scenarios. And let's actually quickly talk about it. So this is now going to be a gross income question. So whenever they ask you to discuss gross income, you obviously have to look at the mark allocation. This is a fair amount of marks, 10 marks. So usually what we have to start with is you have to give the section 1 definition of gross income. Let's quickly get that down. It's the total amount in cash or otherwise. Sometimes people break that down into 2 bullet points, that's fine. Received by or accrued to, in this case, a resident during the year of assessment. Excluding capital nature. And very often that is where it ends the definition. But I suggest that you also write down including the special inclusions. This is specifically for you to also consider. Now, let's have a quick comment here. You can see I'm saying here it's for a resident. Now, this question doesn't tell you it's for a resident. So how do we know? Guys, that should always be your assumption that it's a resident, unless it's something specific that indicates otherwise, or they tell you, or it's clear that a person is not a resident. Okay, so this is 1 mark which you would usually get for just stating the definition. Then, in this case, you'll see that I've added a mark for section 102 of the Tax Admin Act. So the Administration Act, it says the burden of proof or the onus of proof is on the taxpayer to prove that an amount is not gross income or that an amount is capital nature. Or included or excluded, you can say that, from gross income. Please remember that. That means that if an amount is capital in nature, SARS will go sometimes and say, we believe this is gross income. It's then up to you as the taxpayer to prove that it's not. It's not someone else's job. Now, this is just a couple of comments still. Whenever you now have to discuss a gross income question, you have to state these things. Then for each thing, I'm going to just make a bullet point here. I'm going to call it step 1, but this is probably step 1, step 2, step 3. I don't like to give steps here because you have to be a little bit flexible on questions, but let's call it for now. Step 3, I would suggest you always indicate in a simple sentence what parts of the definition has been met. And then number 4, I'll explain what number 3 is now. Number 4, state the issue. Okay, so let me explain. If I go back to our question here. Okay, so let's look at scenario 1. So scenario 1, there was a piece of land that was purchased. We built a warehouse. Then there was a fire that broke out, and you received this 5.3 million rands. Okay, so let's think about what has been met so far on the gross income definition. We've received an amount in cash. We're a resident. It was during the year of assessment. It's not a special inclusion. So can you see, those we know for a fact. The issue here, what we have to discuss, is whether or not it's capital in nature. Let's quickly go and look at the second one. Same with the second one. We sell this property for 510,000 rands. So we received a total amount in cash otherwise. We're a resident. It was during the year of assessment. It's not a special inclusion. So again, the issue is it capital or not? Let's look at the third scenario. So the third scenario is, there's two parts to the third scenario. The first bit is the sale of 58,000 rands, and that's including VAT. The second part is the excess amount. So for the sale amount, the 58,000 rands, selling the goods for 58,000 rands, it's a total amount in cash received by the resident during the year of assessment. It's not capital in nature because it's our trading stock, and it's not a special inclusion. So that part's met. But when you think about the excess, it's a total amount in cash or otherwise received by or accrued to. Now, if you know your theory already here, you should now go, that's the question mark in this case. Because received by means we are unconditionally entitled to it. It's ours. We received it for our own benefit. We are a resident. It's during the year of assessment. It's not capital in nature. Because again, it's for trading stock. It's not a special inclusion. So in this case, that's the issue. Right, so for the others, the issue was whether it's capital nature, and in this case, it's received by or accrued to. How do you know this, guys? Obviously from knowing your theory and knowing what they're trying to test. Those things are always kind of the same. So you need to know all those different principles from the court cases. You don't have to know the court case names. There will be some bonus marks allocated for it sometimes. But those principles from the court cases, those are the things they test. So you need to know that. Okay, so let's talk about it. I'm not going to write out every single part of this. Let's talk about the first one, the scenario 1. So again, this is where we received money for the warehouse that burned down. We received 5.3 million rands, which was 4.95 million for the warehouse and 350,000 for the trading stock. So our question is that amount that we received, is that going to be gross income or not? Now, the amount that we received for the warehouse, again, you remember I mentioned this comment. There's a question that they say. This comes from two court cases. WP Beleggings and the Stellenbosch for winery case, basically. You'll see also I've mentioned them in the solution. Where it asks, this money that you receive from the insurer, the reason you receive that insurance, is it to fill a revenue hole or to fill a capital hole? Now, what it means is to fill it is saying, what are they compensating for? Are they compensating you for revenue that you've lost or for a capital thing that you've lost? Now, the warehouse, we're not in the business of buying and selling warehouses. That's not our business. The warehouse was used to hold the stock. If you think about the tree versus fruit case, the tree produces the fruit. The fruit is our trading stock, and the tree is everything that is used to in the creation of that trading stock. So our factory and our warehouse and our machinery, all of those things. So the warehouse is the tree, which is capital nature, and the trading stock is the fruit, which is revenue in nature. So the 4,950 for the warehouse will be capital, and the 350,000 will be gross income. So let's go and see from our solution. So I don't want to just rewrite it out, guys. So here we go. So that will be a waste of your time. So general mark stating the definition, stating section 102. Right, so look here. The first thing is, it is clear that an amount was received in cash by a resident during the year of assessment, and it's not a special inclusion. I've given a half a mark here because scenario 2 has the same ones in it. So together it would have been 1 mark. So some of you might have written for scenario 1 and 2, it's applicable. The issue in this case is where it's capital in nature. So if it fills a revenue hole, it's gross income. If it fills a capital hole, it's capital in nature. Here's the court cases. The Stellenbosch Farmers Winery case or the WJ Fourie Verleggings case. Right, that would give you a bonus mark if you could. name that. If you can't name the court case, guys, that's fine. Get the principles. So this trading stock is a revenue hole. So the amount excluding VAT, remember that, guys, is gross income. The warehouse is a capital hole. There we go. Scenario number 2. So this is now the sale of the land. Again, it's the same type of principles. Why did we just sell that land? Is it the tree or is it the fruit? Right, it's the tree, because we used the land that we had when we had the land, we bought it. Why did we buy the land? We bought it to build a warehouse. So remember all those discussions, like what is the intention of the taxpayer? When they bought the land, it was to build a warehouse, which is capital. You didn't buy it to sell it. During the time that we held it, we used the warehouse. When we sold it, was there a change in intention? Can we see that something has changed where the taxpayer went from using it for capital reasons to a scheme of profit making? No. So what is the scheme of profit making for this company? It's to sell trading stock. This is not trading stock. So all of these things, mentioning that, will lead to points. So let's go and see it from the solution. So first up, we state everything that's clear from the question. Again, it's this point here. State everything that has been met. State the issue. So that's what's been met. The issue has been its capital. So to know if an amount is gross income or not, we consider if it's in the scheme of profit making. That's the Stott case that told us that for bonus mark. Think about the tree versus fruit. That's from the Visser case for bonus mark. The warehouse is the tree because the selling of the trading stock is the fruit. We're not in the business of buying and selling land. Our intention was to erect a warehouse, which is capital in nature. There's been no change in it, so the amount is capital in nature. Right, scenario number 3. Again, we sell it for 58,000, we receive 85,000 rands. So the question is, that excess amount, must it be included? Right, they're paying out the refunding of the refund is not an issue unless the amount was gross income. And then you have to discuss if it will be a deduction. If the amount is not gross income, then it also can't be a deduction because it wasn't included in our gross income. Right, so total amount in cash, yes. Is it received by or accrued to us? Now, received by, it means you must have received it for your own benefit. Now, if you received it and you put it into your bank account of everything else, they will treat it as if you received it for your own benefit. Remember, there was that court case, the Pyatt case, that said if you received an amount like a deposit, but you did not put it in with your bank account, you kept it in a separate, you kept it in a trust account, then it will not form part of your income, because then you will view it, you indicate that you've not received it for your own benefit. Again, if you didn't know about this principle, guys, it might have been a little bit more challenging for you, but it is a generally accepted principle from case law. So if we go and talk about it, the amount received must be for your own benefit. That's the Geldenhuys case. So the goods that were sold at 58,000 rands, that is gross income. The question is that excess amount. Because we kept it in a separate trust account, the Pyatt's case said that we did not receive it for our own benefit. So the only amount that will be included in our gross income is that 58,000 rands. Again, the amount excluding VAT, because there's output tax on it. You can see you could have gotten away in this case by there's 5 marks available by not having all of those. Again, guys, bonus marks are not always in the question. They're not always give it to you in a solution as well. the way in which the psychiatrist example analysis have changed says that court case names are not as important as the principles. You must know the principles. Alright, so that's it for question number 1.